the truth about Twilio stock. Okay, this one's one I'm really excited about. So for those of you who don't know, Twilio, they basically do like automatic marketing for companies, so you can connect with customers and clients at scale, which is super, super useful and really, really awesome. They have like automatic CMS or like client management systems where they like send people stuff. What they're really known for is like automatic text and automatic phone calls, identity verification, and programmable texting, programmable voices. The people that basically run a lot of like the verification apps for sending out phone numbers, sending out text at scale for large companies, which is kind of their like core thing. And then they also run SendGrid, which is basically what runs basically the SMTP for every single company on the planet with a high degree. I mean, basically everyone uses SendGrid, and so they own SendGrid, and really they're kind of the core backbone for a lot of really some of the biggest companies on the planet through their APIs and their phone calls, their automated support, and also through WhatsApp and through Messenger and stuff like that. So they kind of automate a lot of that back-end stuff and connect a lot of people together through their marketing automation. So what's cool is like their target client is they basically sell the businesses, right? So the people they're selling to, they have a lot of money, and then their services are just like a small little chunk of their overarching marketing expense. Like it's not that much to use their services in comparison to like overarching like marketing budgets here. So like they have a pretty nice business, a pretty nice space where if they get a client and that client is basically going to stick with them for a very, very long period of time and scale with them over time to increase the amount of usage they have and therefore the amount of money they generate per client over their lifetime of the client, which is very, very long. So this would be like a long lifetime. And the reason why is because like once you start implementing your marketing with them, it's kind of hard to move away from it, right? You can't just stop sending people text messages. You can't just stop sending people emails. You can't just stop having automatic phone campaigns. It just doesn't. You just don't stop that. The reason why is because that turns money into more money through the power of marketing, and they automate that, and they do it really, really, really well in a cost-efficient way that scales better than almost any other company in the space. And so that's sort of their niche. That's what they've been doing for a long time. If you go over to finance and you just look at the stock at first, you're going to see the chart goes all the way back to like 2000. But if you actually like pull up the chart, you're going to see the first pricing starts around 2015 or so. 2016. So I think they went like public in 2000, but then they went private and then they went public again. I'm not 100% sure about like why the stock does this in finance, but you pull up the chart on finance and you're seeing the same story. So they're a fairly new company. The pricing data goes back a couple and then it just doesn't exist before that. So kind of cool, I guess. And then they have this thing they did in 2000. So something would happen in 2000 and they came back to private, I guess. I don't know. But basically, they've had some pretty stellar growth ever since then. They've gone from like, I think 20 or so to 150, which is pretty damn good, in a year and a half, which again, really, really nice growth there. Their overall company is worth about $10 billion right now, which is sweet. The only thing about it is they have like negative earnings, which isn't great, but the underlying company is really strong. So why they're growing revenue really quickly, and they're kind of doing that thing that most startups do, where like their revenue grows and their earnings decrease because they lose money, and they're like trying to figure out how they're going to make money in the long term. Interesting because these guys, from what I can tell, make money hand over fist. Like the services that they sell make them a lot of money, and are extraordinarily scalable, which is the purpose of their whole company, is to scale. They're in the cloud communication space, but again, basically it's all about marketing automation, and that's really what they're focused on. Well, I mean, that's what I paid them for. I mean, I don't know, maybe other people pay them for other stuff, but that's their core. They kind of power like Uber and Lyft. They're the ones that really make all those like communications work at scale, which is pretty sweet. If we take a look over at their financials, we're going to see basically about 1.3 billion in top line revenue, which is awesome, and another historically it's been growing. So it was at 277 million 2 years ago, and they've essentially quadrupled, almost quintupled their business in a couple of years, which is why, one of the reasons why their stock has quadrupled, almost quintupled, actually sextupled, which is pretty impressive. Because they are really, really growing pretty quickly at the top line. Their cost of revenue is growing accordingly, and so that's why they're obviously struggling a little bit right now to actually turn that into earnings. If we take a look at their statistics, you're going to see that basically their operating margins are not the best. The profit margin right now are negative 27%, and their operating margins are negative 30%. So if you give them $100, they will turn that into negative $30, which is pretty bad. Usually you'll see some startups, and that's kind of why they are where they are right now. If you look at just their growth in market cap, they've gone up from about 8 to 16, and then now they're 15. So their company has been really growing super quickly, and the reason why is because they just have so many high big name clients, and they service so many people. So even though right now their client isn't generating them a lot of actual earnings, the earnings they just aren't doing very well in terms of turning the money they take into actual money. The earnings are negative right now. What's important and probably the thing that's the big kicker for this company and is allowing them. I mean, these guys are freaking advertising. We'll look at that in a sec. But really, the big thing with them is they have so many clients paying them a lot of money on a recurring basis for these services that they use. So that's kind of where a lot of the value comes in, is monetizing the existing client base that they have and expanding that into new industries. If you think about just the industry that they're in, online marketing in general, and I guess automated follow-up, it's a very large market, and it's only going to grow, as businesses grow and need to sell things, which is kind of always happening. So there's really not a question of the value in the long term. This is a really solid long-term play. As long as they continue to have high-value clients and it contain, I mean, really nobody else really does what they do. They're essentially the only player in the traditional voice market, I know for sure. And the Centrid, basically nobody has the same pricing efficiencies that they have. What they're playing is a game of scale, right? So they need a lot of clients to make what they do work at such low prices, because they have sort of the lowest prices for everything that they do. And that's why you're seeing a lot of losses here, because they do operate sort of with this mentality that they want to get more clients and charge them less, which is awesome. They should get really nice pricing. And so for them, they just need to have more clients. Their quarterly revenue growth is phenomenal. It's 62%, and that's really the saving grace here. As long as they can turn that into more gross profit and expand to more clients, they're going to get economies of scale very quickly and turn that into a lot of money in the long term. They have a lot of it held by institutions, and right now 16% of their float is short, which is really high. That's really high. A lot of that's probably because of the overarching market conditions, and also because of the stock. Just looking at it in terms of a price, just looking at the price of the stock. So you're sort of the start of the run up right here, and it hits sort of the peak here, and then it goes down, and then it hits the bottom here on the Bollinger Band, and then it goes up, and it hits a peak here on the Bollinger Band. And it just very recently has kind of dropped out of this M setup. The target on this trade is pretty basic. I'm thinking we'll just take this height from about right here, which is the lower of the M, the lower peak point. The lower peak point. Take this height right here, and then we'll just add this once, and then we'll add this again. And that'll give us kind of our aggressive target is the double one, and our conservative target is the single one. The aggressive target for this is about, I would say, $27. The conservative target is, give or take 55. So we got 55, and I'd call it 27, which is pretty sweet for a stock that's $70. That's a lot of money to make on the downside there, which is pretty dope, to be honest. So that's sort of what we're looking at in terms of why there's probably so many people shorting the stock, is because it's at 70, and there's a pretty damn good chance it'll lose about half of its value in the next 4 or 5 months, just based off of market conditions, but more importantly, an interior Bollinger Band setup, which is really solid shit. So let's go over to their statistics again. So there's a couple more things I want to point out before we get deep into the stock analysis. And one of those important things here is their book value. So their book value right now is at $30, and so that's really going to be what I believe a floor in the stock price. You're probably not going to see it go below book value by too much, unless the economy really hits the fan. The lowest it'll probably go is 25. just because it's not going to want to deviate too much below the book value, and the book value is not going to change particularly much in the next like year or so. Like that's kind of a more consistent thing. If we take a look over at their financials and their, well, first of all, here's the revenue. I mean, it all looks really great. Basically, they just have a lot of expenses, so that's kind of, and a lot of R&D. R&D is phenomenal. I love that they're investing in R&D. If you actually go over to their website and you click the products tab, at least, right now, I'm sure it changes by the time you watch this. They have a lot of products that are in development, which is really cool because it shows that they're investing in actually creating new things in the market instead of just doing stuff that already works, which is phenomenal. A lot of the new stuff they have here is related to like phone calls and SIMs and Internet of Things and runtime. You can use to develop apps at scale and also connect SIMs at scale and connect IoT at scale through conversations, and it's really, really cool. What they're developing is super, super groundbreaking, and it might sound like gibberish to you because some of you guys might not be into marketing, but like this is some freaking solid stuff right here. This is like literally what runs like every internet company on the planet that requires any kind of like verification or marketing. Like these guys are at the core of everything there, which is really freaking crazy sweet. And literally, I think everyone uses SendGrid. It's like not even a question. It's just the default SMTP. And so, anyway, if we go back to their financials and we look at the balance sheet, okay, that's the important part. We're going to the balance sheet. What we're going to see here is very, very important because once there's this big downturn in the market, right? We're going to want to see cash on hand to make sure that they have stability, and that is exactly what we see. So they got about 400 million on hand last year, 250 million on hand, 2 years ago, and then 250 million on hand last year. And that is great, especially considering sort of the way their business works. Right now, I think they're losing about 80 billion a year, or 80, not 80 billion, that would be really bad. That would be like Amazon level losses. Yeah, so they're losing about $300 million a year. So at least they have enough cash on hand to cover that without having to mess with any of their assets. And then they also have about $1.6 billion in short-term investments, which are currently going to go to like 0% really, really soon. So that gives them easily like 5 years of burn time to figure out how they're going to turn this into an actual profitable business, which is really, really good. It's great that they have cash on hand. It's going to be really simple for them to survive a recession because they have that cash on hand. They're not going to have to sell anything at a discount. In terms of their property, like they're mostly an internet company, so pretty small here. $300 million, $400 million for a company that's $1 billion market cap is not very much. And then about 2.3 in goodwill, which I'm guessing is just based off of all the new technologies they're developing, which is totally cool. That's fair. These guys, again, they just do so much in their market. They are a very dominant player, and I think that goodwill, if anything, is understated. And then intangible assets. So a lot of really sweet, like just cash here, and then a lot of assets they have in terms of like their internet business. So those are accounted for in intangible assets and in goodwill because it's kind of hard to show it on the books sometimes. And in terms of the liabilities, it's really just long-term debt. You got a $500 million in long-term debt, which is fine. I mean, there's nothing wrong with that. And that's pretty much it. Retained earnings, obviously they're carrying forward their losses, which is great. And they have basically about $4 billion in stockholders' equity because basically they have no liabilities at all, which is really just phenomenal. I mean, that's great to see. $4 billion in shareholders. I mean, that's really great. But it's also a little bit concerning because 2 years ago they were at 400 million, and then they were at 400 million a year ago, and then 2 years ago, I guess, and this was 3 years ago. And then last year they were at 400 million, and this year they just went to like 4 billion. And the reason why is because the stock just freaking exploded, okay? And so it's a little bit concerning when you have a 10x growth in shareholder value. I mean, it's phenomenal, like it's great, like don't get me wrong, that's awesome. But it shows that their stock is more or less like super overinflated and hyped up right now, and it's just a little bit overbought. With that said, last thing I want to look at here before we go over to the report is the cash flow, because just to make sure that it's a reliable long-term company, you're going to want to see quality cash flow. Yeah, a lot of it's just accounted for here in the net cash. And they also, I guess, issued $1 billion worth of stock, which is awesome. That's like free money for them, basically. I guess they're selling the shares. So anyway, bad net income because of them losing money, which isn't good. But I mean, everything else here is basically what you would expect: working capital, accounts payable. I mean, it's nothing else that you really out of the ordinary here. The most important things here are probably just going to be them issuing $1 billion of stock, and then also taking that money to conserve and serve their operations needs. The other big numbers here are stock-based compensation at $275 million, and for a $10 billion company, that's probably not that big of a deal. And just depreciation of whatever the hell they own, probably the properties in their offices, which is cool. Okay, so just looking at it fundamentally, they're a solid company. They have like pretty great management, and the people on the top, I mean, they're doing a good job of just keeping the company afloat and making everything work, which is awesome. Like, money comes in, and they do a great job of accounting for it. Their only challenge and the only difficulty is that they, at the moment, aren't able to turn that, money that comes in the front door into like actual bottom line earnings. And that's obviously going to be the one thing that's going to hurt it in the short term. In the long term, though, like, these guys should be okay. Just because they're in the moment, they're at a stage right now where they're kind of growing, they're scaling, they need to expand, and so it's pretty reasonable to think that, like, probably after this recession, they should be able to achieve profitability, and that's when this company is really going to have some nice potential. As soon as they achieve profitability, they can like have positive earnings on a consistent basis. This is really going to be like a freaking home run stock right here. And the reason why is because they are so scalable. That basically what you have right now is this chart, and they're growing, and they're growing, and they're growing, and they're growing, and they need to get to this one point right here where they achieve profitability. And at the moment they hit that point, what's cool is every moment after that is just going to be geometric compound scale, and this is going to lead to a lot of really, really big returns. The moment that they hit that scale factor, the moment that they hit is they really need to hit profitability, and as soon as they start to produce positive earnings, positive cash flow for like a quarter or two, I think what we're going to see pretty easily is this is going to lead to a pretty nice monthly MACD crossover, and that's going to lead this stock to pretty much like probably $300, $400 or so in the coming years, just because they are pretty huge. And that's going to happen if and only if no gigantic competitors come into the space and try to do what they're doing, which likely won't happen because what they're doing is very expensive and has massive, massive startup costs. And therefore, this is a pretty reliable bet. The moment they hit profitability, assuming they hit profitability, like them hitting profitability shows that they have a viable company, and they're really a solid long-term play, and that's something I really like about this company. They're nice stock. As soon as they can become profitable, because they do like actually have to become profitable, but the moment they do, it is like off to the races with these strategies. It's really nice, and that's why I think we have so many institutional shareholders, because they're betting on this thing going to becoming a profitable company. I don't think it's going to happen in the next year, but I think give it 2 or 3, and you should be looking at a profitable company here. And that's probably why so many people are shorting as well. So with that, the last thing to look at here is the report. It's a pretty basic annual report. You got at the beginning, the risk factors is probably the most important part. It's pretty much the same risk factors you're going to see with any kind of like online company or any online business, where if people don't use their platform, they're not going to have any clients, and if they don't have any clients, then they can't sell things. So that's really the only difficulty with them, and the only thing that's kind of going to be a challenge is they need to sell things, and if as long as they sell things, then they'll be good. It's not particularly difficult. What we looked at earlier, just looking at what they sell, is basically like that's kind of it. They just want their clients to be happy. It's not that difficult. They have this cool little like Twilio magic mentality manifesto that they follow. It's a cool little manifesto. It says how we act, be an owner, empower others, no shenanigans. How we make decisions, wear the client's shoes, write it down, ruthlessly prioritize. How we win, be bold, be inclusive, draw the owl, don't settle. I remember I was doing some research on a really big short position I did on Coca-Cola bottling that I recently closed half on, and it was pretty damn nice profit too. To research that position, and I think I put a video up on here about it. Basically what I did is I drove to the local, the Coca-Cola Bottling Co. consolidated headquarters for the sector I was in. they were headquartered in Charlotte, which is where I was born and raised. And so, like, I drove over to their headquarters, like, parked in their employee parking lot, and just walked in the front door, like, with this suit on. And I remember just standing around in the lobby, like, looking at all their stuff. They had this really cool, like an entire wall, and the entire wall that was just, like, the history of Coca-Cola shown through, like, all of these, like, old Coke bottling and, like, old Coke bottles and new Coke bottles and the history of Coke bottles. And there was, like, an old replica bottling machine in there. And I remember I was walking around this lobby just checking this thing out, trying to figure out if this was a company I should short the hell out of, which, spoiler alert, it totally was. The operations facility management was crap, and the employee man, I took a bunch of the employees, they were like, yo, short the hell out of the stock. And so I did, and it turned out really well. And I remember I was standing in the lobby, and there was this, like, glass pane, and like, etched into the glass pane by some magic laser. The back of the glass was like black marble, and the front of it was like the glass, and it was like etched into it, and it was like this manifesto of like Coca-Cola bottling, and how they always strive to serve like their clients at the best possible mean demeanor, and how they always want to have the best output ever. And that's kind of what this reminded me of. I remember I was sitting in that lobby, and like on the left of me there was this big wall of art, like encased in glass with the history of Coca-Cola. And on the right there was a secretary who thought I was super weird, some like weirdo guy who just walked in to look at Coca-Cola, which kind of was. I mean, I made a lot of money on the trade, so I don't care. I got no shame about it. And then to my right there was this like big bin. It was this massive tub. And inside of it, you open it up, and there's like all these little Coke cans. There's like Coke Zero, Coca-Cola Classic, Diet Coke, and then Fanta, you know, Diet Fanta, and all these other drinks that they had. There was like probably 15 brands of drinks in there. All these little mini baby cans, like 12-ounce little baby cans. And I'm just like, she's like, take some soda, because they have like so much soda. And then right in front of me, to the right of like the glass, I don't know if you guys have ever been in like a big office building, but they have like these glass panes that retract and come out of like the wall, and you come up and you scan your employee card, and the glass panes retract, and then you go in, and then they close behind you, and then you get in the elevator and go to whatever floor you're working on. It was a pretty big building to only have one secretary, to be honest. And so that was sort of to my left. It was like these big glass panes, these like glass door thingies. And there was like a security guy guarding them, which I couldn't for the life of me figure out why there was this office building in the middle of nowhere, where there's like 5 Coke bottling facilities around, where they're like shoving giant truckfuls of sugar water into the town, and oh my god! And they're right next to the water plant, because that's where they get all their water. And for the bottling, it was one of the best times I've ever had. And then right in front of me is this pane, and on this pane, like in front of this marble, this black marble, this onyx, is this like laser encrusted like glass manifesto of the Coca-Cola spirit, the Coca-Cola emblem, and their mentality. And that's kind of what I see here in Twilio, is they're trying to create a culture and a message and a vibe in a place that they want to go to, and an experience that they want the people that work for them to have, so that they create a better output and have sort of greater independence and empowerment. And that's really what I see here that's really cool. The Coca-Cola one was totally bogus. It was like super boring. It was like, the first paragraph of it was, we are going to create the, like, I swear the first line of it, from what I can remember, was, we want to create the maximum value possible for our shareholders. And I'm like, dude, how is that going to motivate you? Like, they don't give a shit. No one there cares about the shareholder. Except the CEO, who doesn't like even go there. No one cares. And then the second paragraph was like, we want to serve God. And I swear to God, it said that. It said, we want to serve. It was like faith. It's like this Christian stuff. It's like, dude, why is this inside of Coca-Cola? And it was just this really convoluted company. It was a nice company message. Don't get me wrong. It was someone spent a lot of time writing it, I guess. I think it was the original founder's message. And it was pretty. It was cool. I mean, totally different scale. This right here is a very common book press. Kind of like LinkedIn released sort of their white paper of what they want to see in a new client or a new employee. They released that, and I think Netflix did the same thing. It's one of these companies that released this white paper, and everyone loved it. They wanted to come work with them because they love their principles. I think that's kind of what we see here with Twilio, is they have these really, really great principles that inspire people that work for them, and it's really kind of impressive to see that happen right there, which is super cool. I remember when I was driving away from the Coke headquarters, you have to drive around like this fountain, and like the whole front of the building, there's like two buildings. First building's on the left, second building's on the right. There's like this fountain in the middle, and it kind of connects them. And I remember I was driving around like this gigantic, in the middle they have like a roundabout, and in the middle of the roundabout is like this massive array of flowers, this floral garden. It's really kind of crazy cool. And they probably spent like easily 5 figures making like this garden around the front of the building, and there's like bushes everywhere with flowers and fountains, and like, dude, I don't know where the hell they get the money for this, but it definitely is a complete waste of money. But it looks cool. One of the reasons I shorted the stock. And I was driving around this roundabout, and there was like all these plants everywhere and all these beautiful signs. It's just such a phenomenal place. And I'm like, wow, you know, they're just working on so much stuff that literally makes no difference at all to their end client or to their investors. And here with Twilio, I think I see the exact opposite, where they actually care about creating a unique spirit and inspiring others to work together in an effective way with strong principles. And I mean, even Ray Dalio, like with principles, like it's the exact same thing you see here, where these guys are really putting up the effort and the faith to actually care about their company, which is really, really awesome. I think it's one of the things that could really help them to create a lot of overarching shareholder value and long-term growth. Is they have a manifesto, they have a plan for what they do. It's not like they're throwing darts at a dartboard with blindfold on, drunk, and olives in their mouth. Like, they don't care about that. They have one goal to get to and one sort of overarching message to live by. And those principles, I think, are really going to help these guys, especially in times of economic downturn, in times of negative earnings, in times of increasing revenues but decreasing actual profit. This, I think, could be one of the things that really pulls them through and keeps morale up, even though they're losing money hand over fist, to actually get to the point in the future where they're making hundreds of millions, if not billions of dollars on a quarter-to-quarter basis. Which the takeaway here, and the big, really cool thing about Twilio is they do have a lot of just so many good things going for them in terms of what they're doing, who they're doing it for, the market they're in, the way that they treat their employees, the way they treat their clients. I mean, the way that they sell, the market, everything about these guys is phenomenal. And I think it kind of gets encapsulated. I remember, I think it was like probably 7 months ago, going through the airport, and in the middle of the airport there was this gigantic like LED like light banner thing. You can, like, I guess you pay them, and then you know they it's basically like, you know, the billboards. Like the billboards are like screens. That was basically what was happening. Like this billboard was like a screen, and so you can pay a bunch of money, I'm assuming, to get your company on the screen. And usually what happens is you have one company on the screen, and then it rotates to another company on the screen, and then it rotates to another company on the screen, and then it rotates to another, and then, so there's like 4 or 5 companies that split the costs of the advertising. Now keep in mind, this is at Atlanta Hartsfield-Jackson International Airport, which is literally the biggest airport, I'm pretty sure, on the planet. I know for a fact it's the biggest one in America, and it's the hub for basically, like, I think all of Delta. Their math, I mean, literally like crazy. The way that transport works, you have to literally go underground to even get to a terminal, because everything is separated so that the airplanes can kind of like come in and have double-sided mounts. So there's like 6 terminals, I'm pretty sure, off the top of my head. Maybe it's 5. And basically, maybe it's 6, I don't know. And so the airplanes come in, and they come in on both sides of the terminal. And the reason why is because these terminals are not actually like physically connected over land; they're connected underground, so they can fit more planes in here. I think they have a maximum capacity of like 152 planes docked at the same time, because of the way they engineered this airport. It's so big; it's freaking crazy. And so this is not a cheap billboard to advertise on inside of the airport. Like, this is some expensive shit right here. And I remember I was walking to the airport, I was sitting there and our flight got delayed, and I was sitting there reading, oh God, what was I reading? I think it might have been like something by Tim Ferriss. I was sitting there reading a book, I look up and I see this billboard, and I'm like waiting for it to change. And I sit there and I'm waiting, and I realized that it's not changing. I'm like, holy crap, someone just paid the hell to get all of this billboard space. For this entire LED band. It was like at the front of the airport, like right where everybody walks by. Easily, I would say like thousands of impressions daily. I mean, this is like not a cheap place to advertise. Probably 10 to 20, like so many people here. And I remember I was looking at the billboard, and it was only one company. And that one company had bought all the advertising space, put everything into it, and they created this ad that I'd never, like, the display ad. It was like so futuristic and modern. It was like 90% of this ad was just like a picture of like some fancy modern stuff, and it was just kind of like fancy modern, and it was like this cool little picture in the middle of like sort of modern-y shaped thing. It was like, it didn't look like an ad. It looked like some art. It was so weird. And then I remember just waiting for it to shift, and it never changed. And I realized, holy crap, they paid everything to get this entire ad here in front of everyone. It doesn't even freaking like say buy our stuff. It just looks cool. And then I looked at the bottom right hand corner of the ad, or the banner, and it's got the freaking Twilio logo. And I'm like, oh my gosh, these guys freaking did it, didn't they? Big meme. About the entire ad space just to freaking sit that there, just because they could, just because they can, just because they're Twilio. And I think that kind of sums up their company and how they win right here. They say be bold. Like, these guys are freaking bold, and I think this is a really good emancipation of that principle, is that they just do stuff because they can. They could literally be a $100 million company if they just stopped trying to reinvent themselves and just sold programmable SMS and programmable voice. Like, that alone is a gigantic company that has massive scale. And yet, year after year, they're spending hundreds of millions of dollars on R&D to create new technologies to serve their clients at a deeper level and to create more and more and more opportunities for them to grow. And that's the sign of a company that does not settle at all. And everything about this company, these are just like pretty great principles to live by. I mean, everything here is gold. This is just such a phenomenal overarching philosophy that creates so much long-term shareholder value. I mean, literally, like, this company, the moment they hit profitability and they recover from the recession that we're about to go into, and we'll break down the immediate stock price and the swing trading potential here in just a moment. Like, the moment that they recover from all that stuff, like, this is like freaking a gold mine, just waiting to grow and grow and grow and grow and grow and grow and grow, assuming that they don't have any massive competitors come in and steal a lot of their business, and obviously setting a stop on top of this shit. And like, you can see that mentality translates to their employees, because like, somebody in advertising, somebody in marketing decided like this was going to be a good idea, and they just like did it. And so it's just some great stuff. Also, another cool thing here is Twilio.org, and apparently like they give about 1% of their common stock profits and their funds to supporting nonprofits that want to help communicate with the world. So they basically give discounted / free services to nonprofits, which is awesome. So it's just freaking really cool. Phenomenal management here, and some really nice stuff. Their products, again, phenomenal. I mean, toll-free SMS, everything about this is great. So many big companies use this, and like, I freaking use this. And so you kind of see it scales. It's not just big companies. You can also have like entrepreneurs that use it, and it's really the full spectrum of corporate growth. And it goes from entrepreneurs to big company, and it scales really well. Everything about what they do is just a phenomenal product. I love it. You go to get this book, and then you put in your information to get it. And that's all through Twilio, because it's so good. And all the emails, everything like to serve clients is through SendGrid. It's just such an integral part of so many online businesses. Client support, everything here is pretty basic. They're just talking about like, they're going to have competition. Well, they don't really like nobody does what they do and scale. So they don't have competition. That's kind of the biggest risk, is if somebody tries to come in and challenge them in this market, since this market is a multi-billion-dollar market. Like the challenge is like, if there's a new competitor, that could really hurt their stock. But like we said earlier, like, nobody really has the brand loyalty that Twilio has, and similarly, it's going to take years and years and years of losses to get to where Twilio is already at. So, like, I don't see that as much of a challenge. I don't see that as much of a threat. Like, there probably won't be that many people that want to do what they do, because what they do right now has terrible margins, and in the long term, what they do has pretty awful margins. Because people don't want to pay a lot of money for what they sell, which is why they don't charge that much for it, which is awesome. And so that's kind of the thing with them, is it's not like they don't really have. I mean, basically, they just say that people can do what we do, but like, nobody really does. And the reason why is because Twilio just does it so well. it's like kind of pointless to use other people. And sure, there's going to be cheap knockoffs that some people are going to use. Like some people are going to go and try to find like that fake iPhone from China. But like a vast bulk of people are just going to buy it from Apple, and a vast bulk of people are just going to go through Twilio in terms of their automated marketing at scale. In terms of IP, they have tons of cool stuff. They have 130 patents, which is dope. A lot of the technology is freaking awesome, and it just works really, really well. And okay, they were founded in 2008. Okay, cool. I was kind of wondering when they were founded. They were founded in 2008. Basically, they say, look, people need to buy our stuff, and our market needs to expand so that we can make more money. And their market, like we talked about earlier, is expanding geometrically. Like more and more and more people. There's literally not a business I know that doesn't need what they sell. Like everybody basically that runs any kind of competent business, competent follow-up for clients and sales. They also say they need to effectively manage their growth, which is totally true. They have to manage their growth, like no shit. Besides that, they talk about sort of their quarterly results fluctuating, and this is one that I don't understand that much. Like their quarterly results aren't that volatile because almost everything, like basically everything that they sell is a subscription product or a product that's based off of usage. And usage for what they sell is basically always pretty constant, except for maybe a little bit of an increase around Christmas time. But like a bulk of what they sell is just a subscription, and then you pay for how much you use it. So like I don't really think that's a big deal at all. Seasonality is not a big deal with this company. And I mean, you can look at the stock, and they don't have much price history, so it's kind of hard to like judge it by the stock itself. But like basically, you don't see any seasonality in this chart. The reason why is because most of the revenue comes from subscription, and then a small bit of it comes from them having to sell things. Which they need to maintain effective systems, and they need to not mess up their finances, and their goodwill needs to stay. So they have a lot of goodwill. That's really important. They have about $2 billion in goodwill and intangible assets, and basically they're saying that if a lot of if those assets disappear, then they would lose a lot of value and the stock would probably tank. So definitely be worth looking in later in the report where this goodwill actually comes from. Yeah, so a lot of the goodwill includes cash flows from acquired, developed technologies, the company's trade name, which is very valuable, their brand, their existing client relationships, and assumptions about the period of time that the acquired trade name will continue to be used, tax positions, tax valuations, and discount rates. So it looks like a bulk of their goodwill is coming from taxes that they don't have to pay because they have carryover losses, and then all the clients they have that are worth a lot of money to them that will stick with them for years and years and years to come. That looks like a bulk. Yeah, so their goodwill is mostly their clientele, their client base, and I think that's pretty reasonable. I remember, I think it was a year and a half ago, Uber was one of their really big clients in the texting market, and also in their Flow platform or their Scale platform, the one that Lyft uses. Uber uses the same platform where they like connect with you on an individual basis on your device at scale. And I remember overnight Uber decided that they wanted to distance themselves from Twilio and still use their services, but not really say that they were using Twilio. And I think the stock went down like 30% like in a day, which is kind of crazy. I think it was this day right here, this month. This is a monthly candle, but it was kind of this time frame right here. Uber dropped the public relation connection to Twilio, and like within a night they were down. And there was also an earnings report that came out where they kind of like met earnings, but they were losing money. And I mean, almost instantly the stock just plummeted because of that. So there is a risk that like if tomorrow Lyft drops them, or if tomorrow 1-800-Flowers drops them, or if tomorrow one of their really big clients drops them and they publicly declare it, like they could get screwed pretty hardcore. That's one of the very, very volatile risks of this company. But at the end of the day, like I said earlier, basically nobody does what they do. The only reason Uber was able to distance themselves is because they got to the point where they're able to internalize what Twilio did by just using their app. And very few people are in that same situation. Most people are using them for texting or for messaging or for calling. And those are not things that you can internalize. You cannot internalize somebody's phone number into your app. Whereas Uber, they had their own apps, so it was a little bit different with them. But for a vast bulk of their clients, I would say 95% of their clients, like they basically can't live without Twilio or some service that's the equivalent of Twilio, which makes it a really good scale company because you get a client once with Twilio and they're basically your client forever, assuming that their business is successful to any extent at all. So that's really good. I mean, just phenomenal. Really, it's just an amazing thing here. They talk again here about the goodwill. They say that some of it is about the excess fair value of net identifiable assets acquired in acquisitions, and amortized debt, not amortized assets, which is basically just a way of saying the way that they account for decreases in debt and the way that they account for decreases in the value of the assets they have. So I guess a lot of this here is like them sort of accounting for some of the value of their assets is not very well accounted for through traditional means, just because a lot of it is based in internet technology. And I think that, for them being a $10 billion company, I can give them the benefit of the doubt that they're doing it in an effective and a responsible way. Besides that, there's not much else I don't think to see in the goodwill. Kind of talk about book value, which I don't think should really make that big of a difference. They also say, so here's cool shit. If the net book value exceeds the fair value of the stock, the company will perform a second step of goodwill impairment to determine the value of its impairment loss. So basically, if the value of the stock goes below book value, I think they're just going to decrease the goodwill to make it look like the book value is the same as the stock price, which is kind of sketchy and probably not the most good thing to do for your accounting. But that's apparently their plan, so that's kind of cool, I guess. And then there's a lot of regulation around that because goodwill is kind of an important thing to regulate, and it's one of those things that can really kind of mess around with the company's value if you let it out of hand. So they say that no goodwill charges. Yeah, so they haven't done anything with goodwill recently, which is really sweet to kind of see. Here are also their intangible assets. This is technology, and again, client relationships. Supplier relationships, I guess, in terms of them connecting with people that actually make cell phone towers work and connecting with people that actually run the wires for that stuff. And then back to the risk factors. Basically, they say that if they get sued, that would kind of suck. I don't know if you guys know this, but once you start making billions of dollars, people start to sue you because they want your money. And that's kind of what happens here with Twilio a little bit. Besides that, there's really not much else to deal with here. And, private inboxes, blah, 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 blah. Deal with the effectiveness of their platform. Yeah, so people sending emails through SendGrid to spam, they're going to have challenges, but that really doesn't happen. They have some nice reputation management that works really, really, really well. And everything about their operations is just super solid. This is a pretty rock solid company. In terms of the services that they do, they provide a really great service to the market. And then obviously, so the assets. So, we just looked at that. They don't want to get taken over, which is reasonable. They're not going to pay dividends because they're a growing company and they want to keep their future gains and they want to actually make money. They said that they need money to run their company, and they should be able to raise money, and they can raise money because they own tons of stock and they sold $1 billion in stock last year. So not that big of anything to deal with there. And that's kind of the core of what they consider their risk. And also they acquired SendGrid, and they say that it's still a pretty big acquisition, and so they're going to have to combine the two companies to make them one. They acquired them, I guess, a year ago, which is actually kind of interesting. That's freaking. Yeah, SendGrid, big company, and a really big acquisition. That's a long-term play that's going to pan out for literally $500 million, $1 billion for those guys. That's a big acquisition. With that said, that's kind of about it in terms of risk factors, legal proceedings. Here's the stock performance. They've crushed the market pretty damn well. They've kind of come down a bunch of the market. I think this year right here was a year for them that was really stellar. Besides that, that's kind of it. I mean, they sell securities and they're taking in profits to fuel their operations, and they have a really fast rate of growth. So they had 50,000 clients in 2017, 65,000 in 2018, and then 180,000 last year, which is the equivalent of billions of dollars, which is awesome. They're looking at about a 70% average growth rate per quarter or per year as their clients. And I don't know about you guys. I also don't know if that's going to be maintainable through this recession. But if you can grow your business by 70% every single year, you have $8 billion company times 100. I mean, that's really impressive growth. Their operating expenses, revenue, blah 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 blah, capital resources, cash flow. They take in money, and they got interest rate risk because of their debt and cash equivalents. So all the interest rates went to zero, so basically they're not going to make any more interest on their short-term cash. And they also have a lot of commercial paper, and that commercial paper is going to lose about 80% of its interest-bearing value, which doesn't really matter. Like, it's still going to have the same amount of money. And to be honest, corporate paper and treasuries pay next to zero anyway, so it's not that big of a deal. It's basically like, they're saying that, look, we have $100 in the bank, and right now, based on our investment, for every $100 we have in about a month, 40 cents. And that doesn't really matter in terms of like the overarching image of their entire company. Like, whether or not they make 40 cents on this $100, or maybe, conservatively with the new rates they make, and just the rates of commercial paper markets, 20%, like, it doesn't really make that big of a difference. The thing that's really going to move the needle is taking these clients and having more clients, having those clients give them more money, and having those clients stay around for longer. And that's really their goal and their principle, and what they do really, really, really well. In a very effective manner. And so, like, that's really the core business. It doesn't really matter. You start to exchange rates, like, all this stuff, like, is important because you're forced by law to have that on your annual report. But it does not matter for this company because they make so much money in terms of their subscriptions. It doesn't matter. I mean, I could nitpick all their internal expenses all day, but it just doesn't really matter. The top line is so great and growing very, very, very quickly. Here's their debt. You're looking at at least 200 million should be. Maybe, I'm pretty sure this is in thousands. Should be in thousands. Nothing too big there. Not anything to really look at that's not important. Talk about some of their international growth here and some of their acquisitions, which is going to contribute a lot to their goodwill. Besides that, there's just not particularly much about this company. It's pretty basic. They sell some cloud computing, cloud services, and what they sell works. What they do is effective, and they are just an industry leader and one of the only players in their space. And that space is a space that is growing at, like, give or take 78% a year, which is pretty huge. It really kind of, they're freaking massive. And they're even creating their own subspaces in that space through their research and development and through their new technologies and products. And that is where you start to get a lot of the longer term growth, not just for America, but for international markets, from everywhere, is because they just keep pushing the boundaries and they have such great founding principles. So that's kind of the core, and that's the basis. And that's what I wanted to cover before we got to the actual stock, because these guys are freaking just really, really great in the long term, and they're a great long-term investment once you get a good short-term entry point. And I wanted to make sure we kind of drilled that in, because this is a solid company. Just set a stop loss and you'll be good. And so that's kind of going to take us now into what's going on with the price right now. So I'm going to do, so you guys know the M setup, right? This is a big fat M setup. Target on the trade is like $25, $77. And I mean, basically the stock's going to like 30 pretty easily, 35, 40, given the market crash. Basically, what we need to see here is pretty simple. We just need these guys to go below the 200 weekly moving average. And the moment they go below the 200 weekly moving average and close below it on a week-to-week basis, I mean, it's really not that difficult. This is basically, if I put a number on it, which I will, because we're going to look at the options chain in a second. 1 Mississippi, 2 Mississippi. Okay, that was pretty bad. Let me try that one again. From here to here, and then I guess we'll do some quick finger math. Add that again. I'm thinking like probably $27 on this as a target is pretty damn reasonable. $50 is the conservative target, and I'll use like 42 as our conservative target here. But really, you're looking at about a $27 stock. All right, so we'll say conservatively that this is a $42 stock once the recession hits and all that stuff. So if we look at, I'm thinking like July's and September puts, because they've already lost a lot of their value, right? They've already gone from like 150 to 70. So they've lost half their value already, which is kind of crazy. But again, this is like a solid M. So if the M validates, then like I could care less because like that's gonna continue to go down. And so I don't know, like we'll say that they go to like 42, okay? $42 stock in like the next 4 months, okay? Let's trade the chain on, you can do June, you can do September. The June put, okay, we got July's and we got October's, so I'm just gonna trade the July's. Target is 40, so we can do 50 puts for about $4. You're looking at about a 2.5x return on those, which isn't great. 60 puts are probably going to be your sweet spot. They're about $7. You're going to have an inherent value of those on 20, which is about a 3x return, which is kind of similar. If you look at like the 70s, you're going to pay $10. With a $40 price target, that's going to be worth 30, which is about a 3x return, which is not great. None of these are actually particularly great. I mean, it's a solid trade, but you're only looking at a 3x return, which isn't like necessarily what I would want to see on this investment. I mean, you can buy 40 put, like if they go to 27, then you're gonna sextuple your money, like pretty easily. But I want to be conservative for you guys because I like to be conservative, blah, 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 blah. And with a $40 price target, this trade's a tough one to make. This is, because you're only looking at tripling your money, and that's, like if you can get 50s at like $2, that would be a 5x gain. That would be really good. I would definitely take that. And the stock might go up a bunch, like in the short term. It probably won't, but I mean it could. In like the next day or two, like maybe it goes to 76. It probably won't, but I know today's probably gonna be green day, so it could. If you can get these guys to 76, these should be about $6 or $7. If you get 70s at $7, that'll give you an inherent value of 20 by 7, 20 by 7. Is that right? No, that's not right. 30, because if you do 70 minus 40, you get 30. So we'll do 30 by 7, and that'll get you a return of about 4.5, which is that's a lot closer to where I would want to see this trade at. I think if you can get these options at about a 5x return with a $42 price target, this is a solid trade to make for July. Or you can just be aggressive as hell and buy Mays. The Mays are going to work out perfectly. If you do 60s in May, you're going to get like $3 puts, and they're going to be worth, give or take, 20. That's about a 7x return. So if you can get this to work out by May, you're looking at about a 7x return. May, I guess, is the 5th month, so it would have to go to 40 like in like 4 or 5 weeks, which is kind of a tough one to do. That's a little bit of a stretch, but it's not like that tough to consider. Like this was a 3-week move, and it was half of the move to get to 70. And I mean, they lost 128 to 70 is $50 in 3 weeks. So hell, they could go to 20 in 3 weeks, and these puts would be up, I guess, about. But you're looking at, I guess, $40 of value for $2 investment. So that's 20x. My bad, 20x. And if you get, I guess, the 55 puts for May, which are super far out of the money, but still kind of reasonable. Like I think pretty easily this could be a $55 stock by May. I mean that's really kind of conservative, to be honest. These 55 puts are about $2, $1. The bid's at $1. I mean the last price is at $2. I guess these are actually about a 350 contract, so this would only be like a 12x return. If you get like 50s or 55s, looking at about $2 contracts. So stock goes to 40, that's going to be worth about 15. So 15 divided by 2 is about a 7x return. I think that might be the trade to make on these guys. So if they go green, I'm thinking I'll do some of these Mays. I know they're a little bit riskier. This is definitely a little bit riskier than doing the Junes or the Julys. But the Julys are just, I mean, they're like twice to 3 times the price. It's just a little bit too much for me to do that. It's just not a good ratio on that trade. So I'm thinking we'll do May 1st. Really it's a market play on the market collapsing, which should happen by end of April, just thanks to virus developments, which are phenomenally nice. Stop loss on this trade is if the stock hits 78. I don't want to touch it. I'm thinking we'll do those. We'll do 55 May puts. I'm thinking this is a little bit of a riskier trade. It's a shorter time frame, and it really is a little bit sketchy. So I'm going to do a third traditional position size, and I'm going to write it down so I don't forget it, because if I don't write things down, I totally forget them. May 1st. shy with a target. So see if that works out on Twilio. Cool. And then long term, I'll give these guys probably 2 years to crash from the recession, to recover from the recession. Maybe a year and a half to recover from the recession. And then I would love to have them in my long-term portfolio, because this is a dope stock and this is a really cool company. So I think that's probably the big takeaway here with Twilio stock. Hey, this is John. I want to thank you so much for making it to the end of the video and hope you get a ton of value from the stock that we just broke down and hopefully learned a lot about them. Now, what's cool is if you have an investment that you think could look really nice, or maybe it's a potential investment that you're on the edge about, or maybe it's a stock that you're holding right now that you're just a little bit curious about, or maybe you want to get an outside perspective on it, what's cool is if you comment down below with the ticker of the stock, I'll actually put it in Queen for a potential new video coming out. Now, make sure you also subscribe so that when those new videos do come out, or when these new stocks do come out, you'll be able to get, YouTube will know to send you the stuff, and if you click the bell, you'll actually directly get a notification so that you don't miss any of the new investments that we break down on this channel. Now, what's also cool is if you want to learn how to outperform 99% of investors and radically limit your downside, even if you can't pass a finance test for your life or have nothing to start with but a few spare bucks, I want you to open up a new tab right now, or go to a new browser, wherever you are, and I want you to go to stockmarketsecretsexposed.com. And inside Stock Market Secrets Exposed, you get instant access to a course I used to sell for thousands, a very high-level seminar I gave. The students literally go through and in their first month make 5, 6 figures. And I can't guarantee anything, but I know for a fact that this stuff works and it's gold. What I want to do is I want to give you this course I used to sell tons. I want to give it to you completely for free so you can learn the top 35 secrets that you can use within the next week to really crush your portfolio, really double it and radically limit that downside. So if you want instant access to that, what you got to do right now is open up a new browser tab and go to stockmarketsecretsexposed.com, and I'll send it to you for free. Okay? Sound cool? Sound fair? Thank you again so much for watching, and I will see you either in another video on here or over in the masterclass. Thanks. Bye.